Hey guys, it is Julie here with JT Wealth. In today's video, we're going to take a look at the news behind two stocks that jumped in price today, and that is Workhorse and GameStop. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are splitting the video into two topics, and that is Workhorse and GameStop, and taking a look at the news behind their recent jumps in price lately. Just before we jump into that news, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the great links in the description as well. If you're looking to open up a new investment account, right now Webull is giving away 2 free stocks just for opening up and funding your new account. So make sure to check them out. All right, now let's start off with Workhorse. Now it has been a few months since I've covered them here on the channel, but now this past week they have been in a ton of news headlines. And you can see here earlier this week, the Workhorse stock under ticker WKHS took a dramatic plunge on the evening of February 23rd, where we saw their price decline about 50% from around $28 per share down to below $14. Now, fast forward to this afternoon, and we suddenly see the Workhorse stock, which had been hovering in around the $15 range, take about a 27% jump up, hitting highs of over $19 per share. Now I'm going to cut right to the chase and let you know what was behind this afternoon's big jump up in price. And that is due to a report that says House Democrat vows to stop the USPS contract with Oshkosh Corporation. So this headline is causing quite the buzz, and obviously the stock price has reacted drastically, but it's unclear at this point how much of a vow to stop the contract this actually was, as it seems to be based on this excerpt from a Bloomberg article in which Senator Martin Heinrich, a New Mexico Democrat, said the U.S. Postal Service's decision to not replace its fleet with electric vehicles is a glaring mistake. I would urge Postmaster General DeJoy to go back to the drawing board. Otherwise, it will be hard not to view this as yet one more harmful decision by Postmaster General DeJoy to compromise the operations of the Postal Service. So let's just take a quick step back to all of the news earlier this week regarding who was awarded the USPS contract. And that came on February 23rd when the USPS decided to award their multi-billion-dollar contract to modernize their postal delivery vehicle fleet to Oshkosh Defense. They said this investment is part of a soon-to-be-released 10-year plan to transform USPS into the preferred delivery service provider for the American public. It is said that Oshkosh will receive an initial payment of $482 million, and over the next 10 years will deliver between 50,000 to 165,000 vehicles outfitted with either fuel-efficient engines or battery electric powertrains that can be retrofitted as technology improves. Now, right away, Workhorse did come out and say that they would fight this decision, saying that they requested additional information from the Postal Service about the awarding of the contract and said that they intend to explore all avenues that are available to non-awarded finalists in a government bidding process. So obviously a lot of people were absolutely gutted by this 50% decline in Workhorse, but there was one Workhorse investor who was not fazed. And that was none other than ARK Invest's Cathie Wood, who took the age-old advice to buy the dip. And after seeing that 50% decline in the Workhorse stock, ARK Invest took the opportunity to buy and purchased 660,500 shares of Workhorse in their ARK Autonomous Technology and Robotics ETF. So certainly a lot of buzz in the news surrounding Workhorse and USPS this week. Now it is yet to be seen how serious this vow to stop the contract with Oshkosh is, but we do know how long it took the USPS to even award this contract, so I'm sure reviewing that decision is not going to be a fast and swift process either. So we will have to sit tight and wait and see how this all unfolds. Now, second up in crazy stock news this week is the beloved Reddit stock or meme stock, GameStop. Now, of course, GameStop made plenty of headlines back in January in the epic battle between Reddit retail investors and the Wall Street short sellers, when the stock went from trading below $20 per share up to highs reaching $483, before quickly settling back down around the $50 to $40 price point. Now, fast forward to this week, when on Wednesday, February 24th, we saw GameStop take off again, soaring over 250% to highs of $177. So what is the news that sparked this giant surge in the GameStop stock once again? Well, some say it was this tweeted McDonald's ice cream cone from Ryan Cohen. So first of all, who is Ryan Cohen? Well, he is said to be an activist investor and a GameStop board member. Now, on late Tuesday, it was reported that Chief Financial Officer Jim Bell was pushed out in a disagreement over the strategy to make way for an executive more in line with the vision of Ryan Cohen. Ryan Cohen's addition to the board in early January underpinned the first flurry of moves in the stock after capturing the attention of Wall Street bets. Now, according to Neil Wilson, the chief market analyst for Markets.com, the sudden surge in GameStop late Wednesday might have been triggered by that tweet from Cohen. He said that this cryptic Twitter message could have been a cue to Reddit investors to start buying again. Wilson wrote in a note, "Does it signal Cohen will fix the company the way McDonald's finally fixed its ice cream machines? Or could it be even more cryptic and related to a new website that tells you in real time whether your local McDonald's has a functioning ice cream machine? Who knows? Stranger things have happened. It looks like the Reddit crowd are at it again." On top of this, we also heard from short seller Citron Research, who said that GameStop Corporation should buy online gambling company Esports Entertainment Group. They said the move would be obvious and easy to justify the GameStop stock price. So it seems the combination of these few pieces of news have sent the GameStop stock on another surge. I don't know if this one will reach quite the same highs as that previous one, but we do know that GameStop never plays by the rules when it comes to stock prices. So that is your quick update to help you understand what is going on with these stocks and their big jumps in prices this week and the interesting news behind them. Now, it's hard to say. I think some of the news for both of these companies is still a bit speculative, so I'll be eager to see how all of this plays out over the coming weeks. With any speculative stocks like this, guys, just make sure you're trading smartly and safely. Don't invest more than you're willing to lose, and make sure you understand all the risks associated with your investment decisions. Now, if you made it all the way to the end of this video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.